Bank of Canada, the Central Bank of Canada, they made an important announcement. Interest rate are cut. So they're the first to do this. Big things, really big things. They're the first central bank to cut rates. And it's the first time the Bank of Canada is cutting rates since 2020 in the pandemic. So think about it. COVID-19 came around March 2020. All central banks did the same move. They said, all right, it's time to cut it. They cut interest rates to zero because there was a lot of panic and fear at the time about what would happen to the global economy. But coming out of COVID, we had a lot of interest rate increases all across the world. The central banks rapidly increased interest rates because inflation was becoming a problem. The prices of everything started going up very, very fast. And so the central banks, they come in and they say, look here, we need to slow this thing down. Prices can't keep going up that much. And so they decided to start hiking interest rates, and they hike aggressively. So that's been happening from 2021 into 2022. So it's nice now to see that 2023 roll around and Bank of Canada, one of the largest central banks in the world, is saying, hey, we cut interest rates by 0.25%, which is 25 basis points. Now, what does that mean overall for my Canadians in there, right? Canada, the Canadians. What does that mean? Well, definitely your mortgage, for those who have variable rate mortgages, the rate's going to come down. That means your monthly payments would also come down. Little breathing room for you, right? The other big spill off of lower interest rates in Canada is going to be house prices, real estate prices, because with lower interest rates, home ownership become a teeny weeny bit more affordable, more possible. Now, here's the thing. House prices in Canada are already very, very high. They're high, super high. They started to come down a little bit, and there wasn't a lot of activity in the market for most of last year. But now with this interest rate cut, I know it's gone, it's on fire. Real estate prices are going to pick up a lot in Canada, and very, very fast. So worse if the Bank of Canada come again with another cut at the next meeting next month. If they come again with that, straight real estate prices are going to go take off in Canada for sure, for sure. That's going to happen. Now, for persons who own a home in Canada, that's great because it means that, well, money out there for make. Your real estate, your asset, the value is going up, wealth is being created. That's good. But as you think about getting into the markets, getting into the real estate markets right now, it may be harder to buy a house because the price gone up, right? Especially for new immigrants just going into Canada, it's gonna be hard. It's gonna be hard because the price is higher and affordability is higher in Canada. You have to put a lot of money down to buy a house. It's not, your typical 5%. It's 5% of a million. It's a lot. It's a lot. So you want to think about that for the Canadians out there. Think about, all right, Bank of Canada cut rates. Real estate prices are going to go up because of it. What should I be doing then to position myself to be able to buy my first house? If you own a house already, you need to be thinking about, well, the value of my real estate will go up. How can I make some money off of this? What are some of the things I can start doing?